All right, good evening, guys. Kenna Tortoise Capital Nightly Strategy Podcast for November 12th, 2021. I talked with Danny today. He did the programming on the TC2000 bundle. We're going to offer a Black Friday coupon for that for $1,000 off. This is just a quick look at all the different functions it has in there. It's an amazing piece of work that he's done. I've uploaded the basic overview video to Patreon. I'm going to see if I can't hang the rest of those as well. But it's a pretty good deal. I wanted to share. Yeah, so this was the Society of Technical Analysts did an interview with John Bollinger, and it was conducted by Jeff Boccaccio of the R Factory, and he's one of our long-term members in the community of practice. He's been to 5 or 6 of the research weekends and has just done some magnificent work with programming in TradeStation, TC2000, and Trading Views. And he put together the package for the free Trading Views platform that allows you to do the moving regression lines and so forth. Marvelous programmer, great guy. And this was a pretty interesting conversation with Mr. Bollinger, who's just flat out genius level. Let's see if I can find the. I was looking for. So I posted the timestamps for everything on there. Let's see if I can find that. What was interesting was Jeff asked him about people that have been using interesting applications of his work. Hey, first of all, on this posting here, I've uploaded the Cornell note sheet from Phil Wu, who has put together a one-page note sheet on how to set up your screens. Magnificent work. You can download that from the website. Yeah, so this one here. So Jeff interviews Mr. Bollinger for about an hour. At 41 minutes in, John Bollinger says that the work that we're doing with the regression line crossover Bollinger Band framework is very interesting and sound, and he thinks it's very interesting, and he sees a strong connection to Mr. Wyckoff of the Wyckoff method, who was one of the titans of technical analysis back around the early 1900s, at the turn of the 20th century. And I just thought that was, humbly speaking, it just blew my mind to hear somebody of that magnitude spend the time to think about some other things that came out, though. He talks about the power of doing things by hand, manually calculating, so you get a feel for it, doing things yourself, and the beauty and power of Excel and Python, which I agree with. He talks about rational analysis, which is a mix of fundamental and technicals, which is what we do. He likes the use of Bollinger Bands to define reward and risk. He's talking about trade framing there. He's a big fan of relative strength and doing market, sector, and component analysis, which is foundational to what we do. He thinks the more volatility, the better, because after all, when you are trading on volatility and the rate of change. which is what we believe in. And then his description of how he uses Bollinger Bands to find tradable markets and then define good opportunities sounds exactly like what we're doing with trade framing and target selection. And he talks about if he only could pick one pattern to use with his Bollinger Bands, it would be mean reversion. And what he goes on to describe is essentially what we do with supported spring crossing in Kata 2. He loves the idea of rising lows, that higher low, and that gets us into the Kata 2. He makes an important point about no magic bullets for picking the direction of a breakout from a squeeze, which is what we teach, of course, in the Z3P breakout and also the super pinch. He thinks that's a very good idea. He likes the use of relative strength overlays in market sectors and components, and he basically was describing the essence of what we do in blended monthly rebalancing. If you've heard me talking about how nervous I've been with this rising market and the thin atmosphere, but staying with it, he makes the point that the most bullish thing that you can see is when a market gets overbought and stays that way, and you can't predict how long it's going to go, but what you can do is manage your risk. And he said, in so many words, what we say all the time, and that is, you don't have to be right. You just can't stay wrong for too long. Follow the market, let it decide. So this was a spectacularly interesting interview. I thought Jeff did a marvelous job in this long form podcast, and there was reinforcement of just about everything we say. And it was nice to be singled out for being a good student, essentially. The Society for Technical Analysis has, on the basis of that interview, has now invited me to give a presentation in the near future. I think February they're looking at. So I'll keep you posted on what I want to talk about. But what a feeling of validation. It actually makes me want to redouble my efforts now and work even harder to avoid getting the big head. But boy, it was that was something else. So you can get the link there. Jeff was kind enough to allow us to see their video. He didn't have to do that. I'm a member of it. It costs like $100 a year, and great group of people. There's some Tortoise members in there. Jeff's in there. Jeff's on the board, and I can strongly recommend their work. So I want to just offer that to you. Thought it was pretty cool. Let's see. All right, let's take a look at what we got today. Yesterday we talked about this little inside day being a perfectly postured for potential breakouts. We said, possibly, a move like this or a move like that. We talked about the fact that the 10 period low had moved up to here, and so you're getting a compression on the 10-day look back. So we're still after that SSC and the strong move to the peak, a slight pullback held support at the edge of the dragon and the PSAR, and dojied and started working its way up, and that we wanted to be long if it could get across the high, which it did, and then we would pick up like to get a second position if it took out the hump of the peak of the RL10. And so all that's looking strong and good. And so what happened today, you can zoom in on that a little bit. Yeah, so what we had was, that's yesterday's close. There was that little doji. If I draw that maybe a little more to scale now. So it opens right near that top, sells off a little bit, and then as soon as it takes off above that, that's when you can get long and you get a really nice move upwards. Nothing wrong with that. And we've got the 3-period whole moving average pointing up. You've got the PSAR extension looking good. You have the RL30 extension looking great. You have the RL10 peak. Summer turned to fall, but now the RL10 is kind of flattened out. Here's where across the baby dragon. And today it held support inside the dragon and now has left the dragon and is at the RL10. So that's fair value. So this is a tactical long trade from here to the peak. And then this is where you want to pick up that second entry long if it breaks above that all-time high, this whole period right in here. That's where you want to get that second position. So everything's looking good to the upside in this. Well, that's our 10 period. You know, this RL10 here is like a lid, sitting like a lid on top of this until it breaks out. It's all tactical trade inside here, but today was a good vote to the upside. And now if I'm long this market like I should be, yeah, then I think we want our stop. I would take half of that, like at 466, and just lock in that gain. That's where I want to be at 466. I could appreciate the 1 bar low if I was here, which is the edge of the river and the southern skin of the dragon at like 464. You could be at the 2.5% sell off, which is right underneath the 10 period. But to me, I want to lock in that much of the gain because I kind of consider this to be the buffer. Like I don't want it to come all the way through the buffer and then kick me out. I just as soon say, you know what, I'll just lock in my gain there. And then if it goes into the buffer and comes out, I'll just re-enter. But I want to lock in what I have, which is why I want to be at about 466, like right there. Okay. Let me know in chat if that was helpful. All right. Let's look at the sectors. I'm upstairs in the sunroom, so I don't have my giant monitor, so you have to adjust this a little bit. All right, so here's the S&P. So the S&P had a strong day, closing up 0.75. The Dow up 0.51. The Qs up 1.05. Emerging markets 0.27. The Russell basically flat at 1.0. And our treasuries were off a bit at minus 0.44. So the Qs had the best. All right, let's look at the upside shapes here. We had so we've got agriculture, we got wood, Arc Innovation, and the Fangs up 1%. You got Moonshots 1.07. Clean Energy Tech 1.2. Blockchain 1.88. Wheat and Precious Metals 2.27. Marijuana up 6.15. So the big winners today, the sectors or the individual targets. PayPal and Robinhood up 3% in Coinbase. So that's really your financial disruptors in there, up 2% in Coinbase. Apple, Alcoa, and Microsoft up 1.3 to 1.4. And then John Deere up 0.8. So pretty good array of the usual suspects, but the S&P did pretty well today. This was still a strong vote going into the weekend for the U.S. broad market. Underperformers, you have materials, 0.75, and the other lumber cut, 0.54. You have consumer discretionary, 0.33. You have a cluster here with Mexico, finance, and then biotech, 0.2. Another big cluster here of these are all flat or fractional losses. Consumer staples, lithium, blended commodities, oil exploration, genomics, energy, minus 0.24. Commercial real estate and oil, 0.4, minus 0.4, that is. You have the Bitcoin futures and the Bitcoin trust down 1.2 and 1.4. Brazil, minus 0.2. And then the VIX coming in at the bottom at minus 3.7. Underperformers, Tesla still closing above 1,000, but down almost 3%. The large cap blended crypto, minus 2. TX, the steel company, minus 1.5. Ethereum, US Steel, Cliff, Devon Energy, and Virgin Galactic. So a broader array of underperformers today, but still the ones we want to look at: financial disruptors. And I would say the broad indexes are still the way to go, plus tech. That's the strongest vote up. Was S&P tech was a little better than NASDAQ tech, but that's all good right there. Solid. And Microsoft and Apple getting back into the leadership positions. You gotta like that. Chi Weng Chong asked me if we haven't re-entered, the next re-entry point would be today's high or the RL10 peak, and that's taking a look at the at this entry right here. Here's what I would say is I would be ready to get long right here as soon as it breaks above that high, the high of the day. Like I would be ready with a hybrid frog right from the get-go on Monday, and then I would really be picking up the long side bias if it breaks above today's high, and then I would look at a second position once it breaks above the all-time high. I could argue that if you were above the RL10, you could add your second position here. But that's so close to the all-time high. I don't know if there's that much advantage. But yeah, in our model, we would say the RL10. I'd be ready to go like right here as soon as it gets above that, because I think that I don't think there's a need to wait. It's already voted to the upside. Then I'd be looking at this as the second strong, getting even stronger support if it breaks above those. And then if it breaks above the all-time high, that's where everybody else is going to get really, really excited about this, right? Once it breaks above this all-time high, that's where it's really going to get strong. So you can be strong, you can be long as soon as it breaks above this. Then that little boundary in here is where I'd get my second position to front run this one just a little bit. Then if it breaks through, it should really be strong. Okay. And then I would just extend the that yellow zone inside here as long as it's kind of inside today's range, you're still tactical trading. That's where you're tactical trading. And then I would pick up sort of a tactical short, like for intraday. I would be in this zone, in the red zone, but intraday only. All right. That's kind of how I would look at those. Let me know if that's helpful. Okay. All right. Let's take a look at the. Let's take a look at some of the traders today. Ben yesterday asked about where to find a flashcard. The Kata one, which is the SSC flashcard, wasn't the one he pulled up, was not squared away. So the way you do that is you just come in here and you type like flashcard SSC, and then this will get those top three are going to give you some really useful. Here's a nice site picture of the flashcard from our hybrid frog. So here's your RL10 harsh winter, crosses a baby dragon, turns to spring, crosses the dragon. You're going to get your SSC entry here. By the time it turns to summer, you're going to be in an owl. By the time it breaks out above the previous peak of the dragon, somewhere in here, you're going to get your emerging dragon. When it rolls over and crosses the baby dragon, that's when it's going to come down and test the dragon once more. If it gets through the dragon, it's either going to fail into a supported winter crossing all the way back to the base of the RL10, where you're going to pick up the collapsing dragon, or from this checkpoint, and the sooner is better, it's going to cross back above the dragon, and then you want to nail that, because that's like a Kata 2 when it had a brief fall and then it crosses again. That's a supported fall crossing the other way. So you get a low, a higher low, and you want to nail that as a re-entry. Okay. This one is another structured approach to what we call the site picture, which now includes the PSAR and how we use the trailing PSAR as the entry. So if price breaks through and crosses the PSAR before the PSAR flips, you can just buy that. And then we're looking at a risk box. And then your first decision is, how soon can I get to no lose plus dinner for two? By the time you have two risk execution risks in hand, not drawn to scale, but two of those, somewhere in here, you're looking to activate your sniper when you've got two execution risks in hand. By the time you've got a third execution risk in hand, you're thinking about activating the sniper and the manager, that split exit strategy, and probably adding your second position. If you're using the technique of setting the position sizing risk equal to 0.2, by the time you've got three execution risks in hand, you're at about 0.6 R of position sizing risk, which is about three execution risks in hand. And that's going to be like our average win. And you want to make sure that you've got that locked in, right? And then once again, your collapsing dragon entry is if it violates that PSAR, which links up with the belly of the RL10. When you see the SSC challenge, this is the rule set about simply executing supported spring crossing Kata by the numbers. These are the technical pieces, things that you should be considering, and then some of the psychology associated with that whole pattern. And I recommend that you practice that on symbols DIA and EWZ. If you are, for a whole week, trade only those every day, every signal in the SSC, until you can produce one wooden bowl. just work on carving one wooden bowl at a time, and watch what happens to your focus and your attention and your discipline by taking that SSC challenge. Anyway, what I wanted to show is that's how you use the search function. If you wanted to study the 5-day down, just type 5DD, and you're going to get page after page of references to 5DDs or frog boxes. Or swing trading. This will go back through 7 years of archives. In every place there is a PNG, then that's going to be a frame related to swing trading or something like that. Anytime you see Ken H, you should study that chart. Boy's crushing it. All right. We had a few charts to look at. All right, so this is working with here. NVIDIA. Okay. So here's our RL10 peak, sells off, finds support. Very nice work with the SSC. It gets to no lose, I would say probably right about here. When this starts breaking out to the upside, that's when I like to move my stop up to here. There's your entry. So that gives me, locked in that much. This would be like the path I'd like to follow to get to no lose by about this time here. Anywhere in there you can do that. You might also get there by following the PSAR and then just jump it up. And then following the PSAR the whole way up. And then takes the sniper at the 1, 2, 3 exit. Beauty. Locks in 2.3. Has a reasonable reentry. This might have been a little sooner here, but you save a little bit of that loss by getting that quicker. Minus 0.8. And then the stop and reverse essentially here, just before it crosses the Bollinger Band mean. So that's the Bollinger Band mean there. And he gets short just on this side of it with a stop up here. Crushes that and a nice 1-2 exit for 1.3, which pays for that one. And then how nice is that? Finds support, PSAR flip, nails it, and then takes the exit right here at the PSAR flip for 0.4. Pretty nice. If you are trading properly, that doesn't even matter. If you got skin, start trading that with one share live, and then check to see, does that make a difference in your psychology? You should know that. You should discover that. That's worth all the back testing in the world. Not all of it, but you take my point. Here's a grinding day in CLF for Luke. I guess we're looking at the side of it here. Reasonable long. He gets what's available for 0.7, a nice short. 0.5, scratch, fractional, gets what's available. A review of the week, a 16.5 R week. Payoff or winning rate about 60% to 40%, and the payoff was 3-2. You can work on that. That'll work for you. Pretty good week. Amazing improvement over the last 3 months. Attention to detail. Well on his way. There's no substitute. That comes across in the John Bollinger interview too, about the trader's mind. I'm preparing a workshop on what I call the trader's mind, and I'm looking at the cognitive skills of creativity, critical thinking, resilience, emotional intelligence, self-coaching, systems thinking, and just to build some of those basic habits of mind. True storytelling in order to build a trustworthy community of practice, some entrepreneurial thinking. Because I think those foundational skills are key. That's kind of basic training in the mind of what you need to survive. It really struck me, listening to Bollinger this morning, just talking about his evolution and what we're trying to do. And there's no substitute for doing the hard work yourself and being confident in what you know and the limits of what you know, and making that good judgment. I just think that's going to be essential. So you can look for that course coming up called the Trader's Mind. There's certainly a strong piece of psychology in there. That may be the subject of the talk that I give to that Society of Technical Analysis, just what I think it takes. And I'm going to come from the perspective of a practical decision maker under stress, under conditions of uncertainty, sort of like battlefield decision making with skin in the game, as opposed to a theoretical math approach. It's really much more grounded in risk management with skin in the game. The things that I've learned over a 40-year military career about decision making and putting things in context and focusing on what matters and keeping it simple, just as a fellow monkey. All right, here's one. This looks like Ken H. Recognize the style. That's a good thing. There's a certain consistency with his work. This box here is this box, and he's hit the low, slightly higher low, so he framed this box. There was a gap up, so he buys it. That's the entry at 1. At 2, he moved the stop to under the VWAP from here to just under the VWAP, and then got stopped out at the next morning's gap, and then a re-entry, and then had a fractional and locked in 1.5R. So the alternative was, just follow the PSAR, and he wouldn't have had this. He'd still be in the trade, and he'd have 2.5R in hand. So essentially what you gave up was 1R because of prudence. And I want you to understand the word prudence. I'm reading a French philosopher who was comparing Western thinking from the Greeks with Chinese thinking on the subject of efficacy and the idea of prudence being a grounded, practical, realistic, pragmatic approach that blends a bit of cleverness and cunning intelligence and survival in an uncertain world. So if you just use the PSAR and you saw this thing gap down and you didn't take the exit, I guess that means you'd be willing. In that case, you would be sanguine about and happy if it just came all the way back and gave you nothing. No, that exit allowed you to lock in 1.5 with none of this risk. And then when price improved, it allowed you to experience this. And yeah, you gave back this much in order not to have any overnight risk, but you netted 1.5 when you had a maximum of 2.5, or it could have been 0. And the 2.5, to get to 2.5, you would have had to take, in my view, an unacceptable level of risk against that withdrawal. So I don't think this was too tight. I think it was exactly correct. And prudence said that what you should be satisfied with 1.5, given the two alternatives, that in order to hold out for the optimal 2.5 in the future, you're going to have to take on this amount of risk way too often, and you're going to get smoked on those, and you'll come back and remember this lesson, and you'll think about the word prudence and prudent. I'm going to include that discussion in the trader's mind. That philosopher I'm reading, I wish I could remember his name. He's French. Has an awful lot of goodness to say on this subject. So I'm pretty excited about going deeper into that. Anyway, I digress. All right, let's get the reports up here. Pardon me. Oh, I'm going to have to redo that. That doesn't look good. So no change to the holdings. They're all still pretty good. We've got shapes. So bullish normal. We are back to excellent here, but overbought on the short term now. We've come all the way back to about the 0 line. You can see right now it's all US all the time. Discretionary, tech, and energy. Still risk on and not abnormally good. So this is still favorable for long side swings. And we're getting ready to see that happen next week, I think. ETF2's at 80%. The monthly market health check, I would still have my stop like right underneath there. Monthly low. The 9-week, I also like that 1 bar low. And if not there, then here. We're not yet at the Z2, but this looks favorable after that little retracement. Weekly, it had a nice push up. It sold off, but then recovered nicely here at the end of the week. So that feels pretty good. And all it's got to do is get above this, and then we are off and running to the upside. So again, I like this weekly low here at about 462. And the daily we've already seen. ETF 13s, the standard holdings all did pretty well this week. They held on pretty nicely. You'd have had to been positioned in the horrible assets to get any kind of bounce. That's why you do tactical trading. But those held off pretty well compared to the other choices, and still outperforming on the monthly basis. You're in good shape there. Not much else to see. Let's go to, US is looking great, especially the growth side in tech, whether small, medium, or large. That's all good. Consumer discretionary, technology, and energy are the business sectors that matter. This clean energy fund is really starting to crush. This green and yellow is as good as green and white is up here, only it's come even further to jump to the top of the stack. And then regional banking is a close second. But otherwise, you can see what's working. It's all energy and discretionary and technology. Look into the daily charts. Daily reports, I should say. You've got emerging markets cautioning about weakness to the downside. So if we see weakness next week and emerging markets are the weakest, that's the one you get short. That's what that means. Home Depot, Procter & Gamble, Microsoft, and Coca-Cola in the min pains. Lots of dojis today. A huge number of auto framers. It's a combination of a pullback plus a really tight compression in ranges, gives you those kinds of excellent reward to risk ratios. A number of 5DDs to contend with. In the ETFs, again, just about 5 dojis and plenty of auto framers to work with. I like that. And the auto framer, this should be a rich source of choices for you because you've got a ton of symbols that test out better than 2 to 1. That's all of these here. And this framing data gets you started with your mechanical entries. Great place to get started on learning how to trade frame. These symbols in the winter, or in the summer, I should say. That's where the strength is. I love these right here. McDonald's, Procter, and Pfizer. And the Russell is really starting to show strength right now. And the three-headed monster of materials, tech, and discretionary, hard to argue with those. Johnson & Johnson, Home Depot, and Microsoft, the most current strength. Metals and mining and materials starting to thrive, as is technology. That short-lived strength in Brazil and Latin America lasted about a day. So the things that matter is that until proven otherwise, little pops up on weakness are just that. They are one-day trading opportunities, and then watch for a chance to get short. Still a cautionary tale about coming to a critical state in the market. And the pause that refreshes. All right, that's everything I got for us. We will meet tomorrow morning, 8:30 for the coaching team, the coaching crew. 6 o'clock for the foundations Q&A, and 8:30 for the swing trade review. So take good care, and we shall see you tomorrow.